Yo, what is going on, guys? In this video, I'm going to be going over the 3 confluences that I use to have a higher win rate than before. And pretty much, as you know, the more confluences you have, the higher win rate or higher probability your setup will be. But you don't want to have too many to the point where you're not really ever taking trades, because obviously the only way to make bread in this is actually taking trades. But you don't want to be spamming trades. You want to basically be trading like a sniper. So these are 3 of the ones that I use. I still use a couple more, about 5 total for an A++ setup. And I have all of those in our free Discord. But I'm going to be going over the 3 primary ones that I use for my entry models in this video. It should be a fairly short video, so make sure you stay till the end. Now, if you do want to join our free Discord, we literally have every single trade that we take. It's not just me, it's an entire team of 3 of us that trade every single morning, share a screen, go over our trades and break down every single trade after we take it for free in the free Discord. I'll put the link in the description if you want to join up and just chat it up with us. And we literally send out every single trade. We have a completely free course as well, made in-house by us as well. So check that out if you're interested. Now, let's go ahead and break down the 3 confluences that I use. We'll start off with the first one. And again, this is how I achieve a higher probability setup and how I'm starting to take better trades. That way I can actually scale up my trading this year as much as possible. Now, the first one, delete that box right there, is a fair value gap delivery. Now, it's not going to be any fair value gap delivery. So I'm going to go ahead and write down what types we're going to be actually talking about in this video. So the first type is going to be a 4-hour fair value gap. Then we're going to have a 1-hour fair value gap. And then we're going to have a 15-minute fair value gap. Now, there's actually time frames that align with each one of these fair value gaps. Now, with the 4-hour, technically the 4-hour would align with the 15-minute. The 1-hour would align with the 5-minute. And then the 15-minute would align with the 1-minute. Now, how I actually trade them and what it means by aligning time frames is basically what time frame you would find an entry model properly when delivering off of these types of fair value gaps. Now, I'm going to show you how I identify them first, and then how we deliver off them, and then go into the other confluences that I use to actually find an entry with my entry model. Now, for the 4-hour, I don't really ever, usually the 4-hour has a 1-hour inside of it. So that's usually I'll only make a trade from the 1-minute to the 5-minute time frame. And that includes the 1, 2, 3, 4, and 5-minute time frame. So any entry model that I find within these time frames, this is what I'm going to use to day trade. I feel like the 15-minute for entry models is more for swing trades or longer trades, because those candles are just way too big. But by using the 4-hour candle, you can identify most likely where price is headed to, and I'll go over that in this video as well. But I have multiple videos on my channel that break that down as well. So let's go ahead and get right into it, and I'll break those down for you. So fair value gap delivery. First, let's start off. We go into the 4-hour. I'll show you basically how 4-hour. I'll show you how I mark those out pretty much. So these are the ones that I'm gonna be using to show you guys. But basically, using the 4-hour time frame, you want to identify like the trend that the 4-hour is currently in. For example, today 4 hours was in a downwards trend. I'm on ES right here, but I really want to be on NQ, but I already drew everything up on ES, so it's fine. So on ES, we're on the 4-hour time frame. We are looking at the trend. As you can see, we're currently downtrending. We failed to put in a high right here, and we broke structure to the downside right here after breaking down, making this be a lower high right here, and this become a lower low, right? So we did this actually yesterday, and now today we're looking at potentially a rebalance into this fair value gap, and I'll mark it out again for you. So draw out like that, and basically what I want to see price deliver off of it, right? So how price moves, it moves from internal to external liquidity. Now, what does this actually mean? So when we're in a trend like this, and honestly, I regret not taking a trade today because it was kind of clear. I just didn't expect this big drizzy candle to come about. But I'm gonna break down what happened today, and then I'm gonna break down another example for the exact entries. So price tends to move from internal internal liquidity to external liquidity and vice versa. So external to internal, what does that actually mean? So external liquidity is highs and lows that you see in the external part of a range or a trend, right? So in this downtrend, we have external liquidity right here, external, external. But in order to progress that trend, we go from external to internal. So first we see the market sweep out external, boom, right here we sweep it out. And then internal liquidity is going to be those levels, or you can see them with fair value gaps, basically just areas inside of a trend that have liquidity built up inside them. So basically here we break structure to the downside by breaking this external liquidity, take it out. Once we take out external liquidity, where are we going to be headed to next? Internal. And internal is going to be this fair value gap that gets created on the 4-hour time frame. We get back into it, we respect it, we don't close above it. If we were to close above it, that would be a bullish sign. And now where are we most likely headed now that we've taken out internal to external? So where you're most likely now headed, let me go ahead and draw it out for you. We went from here, took out that one right there, to now we have this one, we took it out, and now we have what? This one, and guess what? We took it out. So that's pretty much how that goes. Now that you identify these fair value gaps and the ones that matter, let's go over how to actually deliver off of them. And I have a separate example on the 1 hour for you for that. So let's go ahead and go back into that one. And I believe it should be this one right here. Yeah. All right. So here I have a 1 hour fair value gap marked out. Again, the 1 hours are pretty nice to deliver off of. So on the 1 hour, I'm going to be looking for an entry on the 5 minute primarily, but it can be on lower time frames if it's clean. But usually the 5 minute is the best when delivering off of a 1 minute fair value gap. I mean a 1 hour, unless there's a 15-minute gap inside of that 1 hour that we can deliver off of on the lower time frame, like the 1 minute or the 2 minute or 3. So once we tap into it, we're now delivering off of it if we're gonna be rejecting it, and that's gonna confirm to us that this is a retracement for a future continuation rather than a reversal to the opposite side. Okay, so once we tap back into the 1 hour fair value gap, I want to see us deliver off of that, and that's gonna go into play with the second and third steps here. And let me go ahead and pull them out for you. So the next one that I use is an inverse fair value gap. Now, how are we actually going to find an inverse fair value gap, and what even is an inverse fair value gap? Again, if you don't know what fair value gaps is, I'll make a whole nother video breaking that down for you, but comment in this video if you want to see a video on that. Now, inverse fair value gaps is when we have a gap like this from this candle to this candle, but we end up getting a closure above it or just in the opposite direction that it was generated in. As you can see, let's find a good example here for you. So right here. So I'm going to make this one bigger. So if I draw this out from here to here, this is a gap, right? Now if I extend it, at first we respect it, but then we end up closing way above it. And this is a bullish sign. And as you can see, that's why price continues to push upwards. So this is a 1 hour inversion with strength, and we actually end up retesting it with the next 1 hour candle and then continuing to push upwards. This is a extremely bullish sign, and that's why I use inverse fair value gaps in my entry model, but I use them on the lower time frame. So let's go into the 5 minute, for example, and go over some. Let's see, was there one today? Let's see. All right, should be an example over here. All right, let's go ahead and zoom in here. So an example of a lot of people actually only enter with an inverse fair value gap. I like to wait for extra confirmation with it, which is the next step that I'll go over. But let's say you were to only enter in off of a inverse fair value gap on the 5 minute. We have one right here. Now this is a super tiny one. I wouldn't really take this, but this is just an example of what it looks like on the lower time frame. So you would look for one like this. I would hopefully wait for it to be more prominent. Most likely on the 3 minute or lower time frames, it's a bigger gap right here. But once you get a closure below, this is a good sign that price is ready to go in your direction. In this case, it is shorts. And basically you could enter in a short position after we get a closure on the same time frame that it was made in, on the retest of it right here. Oh, that is not what I want to do. and stops at the last protected high, and then basically target minimum of 1-to-1, but most likely prominent lows like right here, and that'll give you like a 1-to-2. But I actually wait for a third step, which is what I'm going to go over next, and that is a change in the state of delivery. So change in the state of delivery, change in state is basically when we shift. It's kind of like a break of structure, but we're shifting where price is delivering from in what direction. So for example, we get one that happens right here. If we're on the 5-minute time frame, we just identify the last high or low that was put in. So in this case right here, a low is put in. Now where does that low come from? This low comes from this candle right here. It was the last red candle before this leg was created. It was the first one to be created when the leg happened. So what are we gonna do? We mark out this line right here, just like that. And then once we mark out that line, a closure above is a change in the state of delivery. So here we will get a change in the state right here, and then price proceeds to push upwards. So there's multiple different things you can do to take this. You could enter in on the close of this candle, stops at the swing low, and then target highs on the left side, and that would hit. But yeah, that's just another confluence of the ones that I use to trade my entry model every single day. And actually, I'll go over yesterday's entry model, which was actually a loser. But I'll be completely honest with you. Again, I post every single trade I take in the free Discord, but we'll go over yesterday's trade, which ended up being a loser, and why I actually took it. So here we are on the, where do we deliver off of? Let's see. So pop it up right here, use the free Discord. So if I scroll down again, if y'all want to see this, I put the link in the description of this video. So we have a higher time frame fair value gap on the 4-hour. Let's actually find that. So a higher time frame fair value gap on the 4-hour. Go to the 4-hour time frame. Once we're on the 4-hour time frame, yesterday's trade. Let me delete everything from today. Remove that, remove that, remove that, remove that, and remove that. Oh. So we have a 4-hour fair value gap, which is right here. From here to here. Draw it out. It's untapped. Price taps into it. Now we go down to the lower time frames, the 5-minute, for example. Once we're on the lower time frames on the 5-minute, I want to see price begin to displace upwards in my direction. Now one thing I would have changed about the setup is using a protected low for my stop loss, which I didn't do. In this case, I waited for a 2-minute change in the state of delivery and a 2-minute inversion. As you can see, we inverted down here, and then we got the change in the state right here. This is just to help you visualize what I'm talking about. And we didn't get to hit a 1-to-1 because my stops were down here, but the mistake here was entering this high up, causing it to be a losing trade before waiting for a higher time frame confirmation. So this mistake was made. And what was I saying before? I don't have it here, but what time frame, if we're on the 4-hour or the 1-hour, the main time frame for an entry model we want to look at is the 5-minute for a day trade time frame. So if we go to the 5-minute, what happened on the 5-minute? 5-minute didn't get a change in state, because that would have been that would have been way up here. So would have had to wait. We get an inversion right here on the 5-minute. Bias was correct. We delivered off of a 4-hour gap. Sorry, my throat hurts, that's why I'm pausing so much. Deliver off of a 4-hour gap right here. We finally get a closure above, so we inverse on the 5-minute. We get another retrace, taking out these lows. 5-minute inversion right here. We end up closing above. And then what do we finally get? We do get a 5-minute change in the state when we close above. And now the longs will play out. You can long off the inversion fair value gap. Stops at the other swing low. And then the market continued to rally up until today's drop. So there's many different ways to use it. This yields me between a 45 and 50-ish% win rate, depending how many times I win in a week. Obviously it shifts a little bit, but again, we trade this every single day in the Discord. We have also different people that trade different strategies. So if this one interests you, go ahead and join the free Discord, link in the description. Other than that, sorry my raspy voice today, but this was today's video. I'll see y'all in the next one.